Testing, testing, 1, 2, 1, 2, and testing. Okay, that is everything. Let's get into it. First, let's go and look at what we got on the watch. So low floats, we got PW up here, MNDR, Kala, CETY, and IVP. Higher floats, Nvidia is the only one that has made it onto this one. Okay. So looking okay. So let's look through these low floats and see if any catalysts are for today. So I'm gonna pop y'all over to the catalyst. So on PW, last news that I see here is on 7/3, so that's 5 months ago. 4 months ago. So no catalyst on that one, but it's up 40% with 10 million shares. Maybe there's some underlying news that we don't know about that people are trading on, but I don't want to guesstimate on that. MENDR, 7 million shares. No catalyst on this morning. Kala, 81 cents. No catalyst on this morning. CETY, catalyst from yesterday. Then IVP, no catalyst on today. All right, let's jump over to Nvidia and see what its catalyst is for today. Come on, Nvidia. All right, Google DeepMind scientist slams market after Nvidia and AMD stocks tumble. Nvidia says its AI technology is a generation ahead of rivals. That's what everybody says, huh? All right, so let's pop over here and look into some research. So the first thing we see, the big bull up there, S&P 500 to hit 7,500 by end of 2026. More to come with AI. So that, I mean, this is just a prediction, I guess, very large prediction because it's got a year to happen. Nvidia denies its circular financing. Two big short sellers disagree. Deer outlook falls short as farm rebound remains elusive. Traders crowd into Fed futures targeting a December rate cut. Tesla struggles to course correct from sales skid. SoftBank 3.2 billion bond coupon, highest in more than a decade. Hassett emerges as a frontrunner in race for Fed chair. Small U.S. retailers face holiday supply chaos due to Trump tariffs. Toyota has figured out what makes Trump happy. Here's its end game. So TM. Is TM Toyota? TM. Yeah, they got barely no volume. Okay. Let's see somebody with some volume. Tesla struggles to course correct as sales skid. So Tesla, but I don't see Tesla with volume up here. Let me look at Tesla. I mean, it's slowly moving. This AI chip stock is getting a big boost from Google's hot streak. So Google, and so I don't know what this AI chip stock is. Let's go look. Is it a Broadcom? Is it Broadcom? Let's see. So Nvidia rival Broadcom, which counts Google as a major customer, has seen its stock surge recently along with Alphabet's. With its recent gains, the custom AI chipmaker stock is one of the top performers in the S&P 500. So Broadcom. What is Broadcom's ticker? Rod com. Oh, AVGO. Duh. I mean, it's up there. It just didn't look like the ticker. AVGO is Broadcom. Okay, we've been seeing that one. All right, back over to what we were doing. And it's got lower volume on today as well. Okay, NYC comptroller pushed to drop BlackRock creates test for Mamdani. Adecco says joint venture with Salesforce can help reduce AI bubble risk. Giving thanks for bad economic news. As AI reshapes shopping, U.S. retailers try to change how they're seen online. Reliance Industries JV partners to invest 11 billion in India AI data capacity. This AI chip, okay, we already seen that one. Oil holds near month low as Trump hails progress on Ukraine deal. All right, let's see what we got down here. 14. Let's look at some more recent stuff. So we got. This is the most recent I see.
As retailers gear up for Black Friday, the unofficial kickoff of the holiday shopping season, a study out from Boston Consulting Group shows consumers are willing to spend, and they're also very savvy when it comes to markdowns. Joining me now, Tiffany Ye, BCG partner. Tiffany, thanks so much for being here. I was really struck by the information that you sent us that people are willing to spend. And, you know, we've seen some of the surveys out there that say spending could go up in the range of 3 to 4%. But it sounds like you guys are more optimistic than that even. Talk to me about that.
Yeah, in our recent survey, we actually found that consumers plan on spending meaningfully more this Black Friday season, 18% on average. And while inflation certainly plays a role in that, nearly 75% of them also told us that they'd been delaying recent purchases in order to spend more during this holiday season. Now, what are they spending that on? We really saw the increase across all different categories, and not just in gifts for others, but also for themselves and even essentials that they planned on buying anyways.
And how motivated are people by bargains? I mean, I guess they always are to some extent. But, you know, how much are they prioritizing, and will they wait for those promotions to come?
Yeah, of course. I mean, at the end of the day, consumers want simple, transparent promotions. What we actually found is that most seek those straightforward store-wide discounts. Up to 50 to 60% off resonated best. That being said, consumers are still savvy and they understand that different categories are going to have different promotion levels. What they told us is that their minimum expectation is about 30% off. That's what they perceive to be a good deal. And so it's going to be important for retailers to really balance their sales and margins and keep a disciplined but also nuanced approach this Black Friday season.
I'm curious about how people are shopping and whether, you know, how well retailers are doing at meeting them where they want to shop.
Yeah. So what we're actually seeing is a continued return to in-person shopping combined with online shopping, really that hybrid mode. And what we found is that this holiday season, most plan on doing both. And that drive back in person is driven by the desire to touch and feel products before they buy them, be a part of experiential retail, and get personalized help from staff. And that's in line with what we've been seeing all year. Mall traffic continuing to go up, in-store purchases going up as that hybrid shopping becomes the norm. And I want to emphasize that point on hybrid because shopping journeys are really going across channels these days, including leveraging AI.
Tiffany, when we talk about leveraging AI, I was also shocked by the figure that you put in that something like half of people are going to use Gen AI when they're shopping. But like, does that include also that when I Google something, I get an AI response? Or is that like dedicated people going to ChatGPT and Claude to do their shopping?
So that 50% is individuals who told us they planned on using ChatGPT and the like to help them in their shopping journey. And it's for more than just doing search. Yes, they're looking for what are the best deals and what are the best prices, but they're also using it to compare products and as well as to research technical information. And what was especially interesting to us is that While we only saw about 1 in 4 so far have used it to date in their shopping journey, the meaningful increase to that 50% is seen across generations. So not just your millennial and Gen Zs, but also your Gen X and boomers.
I don't know. I got to do a survey of the boomers in my life to see if that's, I don't know. I mean, yes, I know it's intention also, and reality might be different. We'll see. The other interesting thing I know that you guys are watching is if I'm a retailer and I want ChatGPT or whatever LLM they're using to scrape my site and give good information, do I have any control over that? How can I sort of tip the scales to make sure that it's showing up where it needs to?
Absolutely. Retailers have to be laser focused on how they're optimizing to show up in AI search. That starts with their own site. How do they optimize their product descriptions, their pricing, so that the large language models like ChatGPT are picking up on the right information? It's also about how do they optimize how they're showing up in product reviews, best of lists, so that their products are easily found.
Tiffany, thanks so much. Great to have you with us.
All right. So Black Friday, they gave us a little insight. People are getting smarter, understand that ChatGPT is not the devil. You know, well, I mean, ChatGPT is like at this point it has a paid version, but it's the lower level. You can use Gemini, you can use some other stuff that's a little bit more powerful. But I mean, if you're searching, you're in the store and you ask ChatGPT, yo, where can I find the best this or that or whatever? I mean, and it's a lot of use cases for ChatGPT as well outside of, product searching. You could say, hey, ChatGPT, where are high traffic areas? If you just want to avoid people, you say, hey, what are high traffic stores? Where can I go that is less known? I don't want to see nobody, you know? But yeah. Or you can say, hey, give me store reviews about the people that work there. Is this store getting pretty good reviews on Yelp or whatever? That the service providers are good. If I go in there, am I going to have to chase down a representative? Am I going to have to, sleep dart a representative and wait for him to wake up for me to get some help? That kind of stuff. Anyway, back over here to the charting. So low floats. Got MNDR with 7 million up there with 45% on the board. PW fell down a little bit, back to 28%. Kala, and then CETY, and then EVP. So this is MNDR on the chart. This is a 1-minute chart. And let me go to the 15 minutes so we can look back a little bit further. Okay, this was this Malaysian company that we had seen earlier. Let me edit this. And this was one that was blocked by TOS, I believe. And that's the only reason. So I actually tried to trade this one. And as soon as I tried to trade it, I got the block because it was on topic. They had 2 optimized data centers that were they were acquiring, right? And so I was like, okay, I'm trading this, but got blocked. So yesterday on CETY, it had news like this as well. So go here. Well, actually, let's go back to 15 minutes. All right, so this one had batteries. It was Clean Energy was they got a $10 million battery energy project, storage project. And I was like, okay, well, that is on topic. So I ended up trading this yesterday. Of course, you can see all of my trends, my ideas that I traded in between and stuff like that. And it worked out very well on yesterday with CETY. Very well. But yeah, I'm looking for things that are coming down from the trickle down effect. We know that Nvidia and all of these AI stocks have been in, and we know that infrastructure, IT infrastructure, has been a hot topic. So that's what I've been focusing on. If it's not Chinese, then it probably won't be blocked, and I'm going to be trying it. But yeah, CETI definitely fed the pot yesterday. No, CETY, my bad. So let's jump back over here to the research. And we'll go over those trades in a little bit. Let me look over, what was the other one that I saw? Tech stocks here.
And as how my brain works is I saw higher productivity. I'm thinking more people are using AI chatbots. Companies are squeezing more work out of their aging workforce. This is all bullish for the AI trade. Why are these stocks off their highs, Inez? Come on.
Well,
Yeah, look, I mean,
Go ahead, Inez. Go ahead.
it definitely, you have AI that is making everything more productive, right? And we know that companies are spending more on AI, so perhaps they can't hire as much either because they're spending more on that. But you also have the gig economy that is also in play as well, because you had Goldman Sachs, which Ali Canal had written about this. Goldman Sachs had talked about 15% of those who are counted as unemployed are actually doing gig work. They're driving Ubers. They're doing DoorDash. And so that contributes towards productivity, but these people are unemployed by all means and purposes. But certainly when it comes to the AI play, we are seeing it sort of in real time. You are seeing that companies, when they talk to Challenger, for example, in these surveys that they do and these reports, they are saying that AI is the reason why they're not hiring. Costs being one, AI being the second one.
Nvidia erasing more than $245 billion from its market cap today amid a new report from the Information on Google's AI chip growth. The report detailed that Meta is in talks with Google to purchase its TPUs, a challenge to the market leader Nvidia, which sells GPUs. So what exactly is the difference between the two chips? Let's bring in Yahoo Finance tech editor Dan Howley for more. So TPUs versus GPUs, Dan, what do we need to know?
Yeah, okay. So TPUs are what Google calls their chips. They're called tensor processing units. And they're a type of, get ready for something else, ASIC. An ASIC, ASIC, is an application-specific integrated circuit. Basically spells it out. It's a chip for a specific type of application. That's really what you need to know about ASICs in a nutshell. Now, what makes them different from GPUs? GPUs, they're graphics processing units, but in the NVIDIA case, they're used for AI, are general purpose. So you have a general purpose chip over here, and you have an ASIC over here. Now, Google uses their TPUs, these ASICs, to train and deploy their AI Gemini across their various platforms. They're also offering them out to Anthropic now, and apparently, according to this, the information report, going to be working with Meta, or could be working with Meta, providing them with chips as well. So what does that mean for NVIDIA? Well, it means that exactly what we've been saying for 2 years now, that their own customers have been working on their own chips and could be competitors. This isn't necessarily new. It's just that there's the report of this deal, and the Wall Street reaction, in my mind, seems to be as though these people have never heard that Google had its own chip, or that Meta is working on its own chip and has its own chip, or that Microsoft does, or that Amazon does. All of these companies have been doing this for some time now, and it allows them to diversify beyond NVIDIA. So it doesn't necessarily mean that NVIDIA is going the way of the dinosaur at all. If anything, one of the analysts that I follow said this could be a bigger problem for AMD because they were setting themselves up to be a viable alternative to NVIDIA. I don't even think that that's necessarily the case. I think that there's still room for AMD. But the real thing for people to understand is that, when an application changes or a company wants to, take its chip and then a chip and then use it for a different application, they can do that with a GPU chip like NVIDIA's. For an ASIC, it's not really the case because they're built for specific applications. Again, application-specific integrated circuit. So that makes it a lot more difficult. The other thing is NVIDIA has its CUDA software. Developers develop on CUDA. They're going to have to do something different if they're going to develop on TPU. So it's not exactly a one-for-one. It really is, I think, for a lot of companies about diversifying and getting access to that compute that they need. A lot of these companies are saying that they're capacity constrained. They just don't have the chips necessary to build out their infrastructure. And so if they get another source, then that's great for them. And that's really where this is all coming from.
Yeah, it makes sense. So it's not necessarily of an instead of, it's maybe an in addition to the
Yeah.
chips that they had, because we know that they are thirsty for compute wherever they can get it from. That has been the theme, Dan. Thank you so much for breaking it down for us. It's very helpful. Thank you.
and I just realized through all of that I was muted. So I'm going to go over it again because that was stupid. What I was talking about was my trades for the month. Let me go over that again. So trades for the month yesterday brought me back up to a nice rounded off number. This was what my month was looking like. Had a $190 loss on like the first trading day of the month. I really didn't think this month was going to slow down like that. I was thinking maybe October, December would be a little bit more slowdown. But the first trade I took was a bad one. And well, I won't say it was a bad one, but it was definitely one that I didn't expect to lose that much on. Then I tried to recover a little bit, and this was like almost a no trade week. And just read, and then, you know, a lot of times I was like, well, you know what? There'll be another opportunity. And come Monday, there was another opportunity that covered this previous day's loss right there. Then came back on Tuesday, got a little bit. And of course, you know that I've been avoiding Wednesday trading because statistically, this has been my burn day. I get burned on Wednesday a lot. So then Thursday trade got a $79 loss, which I was like, okay, it is what it is. So ended that week with about 238 in pocket. Missed this whole week right here. So no trades on this week. It was all trash. Then Monday it was trash, and I was like, oh man, maybe we're gonna continue with the trash. But then Tuesday, CETY gave me some opportunity. So like I was showing y'all right here, I am 75% accurate this month. With I took 1, 2, 3, 4, 5, 6, 7, 8 trades. 3 of those 8 trades were on CETY. These were individual trades, so I entered once. And since the ATR was 28 cents yesterday, I was like, okay, let me just be ready to take half of this 28 cents. Anything near 10 cents, I was looking to be taken. So that's what happened on this first trade. I took a 9-cent winner overall on all of my shares. Did take a bigger size because I mean this was a cheaper one. I was like, okay, I'm gonna go ahead and hit it and just get a cushion going. So I took 1,000 shares, got 100 something bucks. Then on the next trade, actually, as this thing started to open up, I took smaller and smaller positions because 1, I didn't want to eat into my cushion, and 2, it was opening up, so I didn't need the risk as much. So on my next trade, I took pretty much half of what I did on this first one, 530 shares, got 58 bucks. Then I took 244 shares as it continued to open up, got 130 bucks off of that 244 shares. And I got a 53-cent return on that. So actually I got really close to what I look for in the higher price stocks of that 30 cents. But I had to work my way up there, you know, not being greedy, taking those profits at the half level of the ATR. And then on this one, I just let it ride. It popped up and absolutely went to the moon. All right, so let's look at the chart for CETY. And so this was what was going on yesterday. This is a 15-minute. Let me go to the 1 minute. Okay, zoom back a little bit. And these were all of my ideas that I had drawn in, looking for it to hold. So I did not see this original move up and all of this. I just came in around like 9:30ish when I started looking, and I saw this structure building. And it came down here to the 163s, and it was bumping up. Now these levels here, this possible daily level, I didn't think it was going to get up to 268 yesterday, but I did see a gap on the chart between 185 and 198 or 196, and I was looking for it to play this gap and maybe end up falling from here. But the catalyst is what was carrying it. It had a $10 million contract on battery storage capacity increasing for New York State. So they hit 2 things yesterday. 1, New York State is where, or New York in general, is where President Trump is from. And I was like, okay, President Trump has been in the news about his talks with Mom Dunny, right? And both of them are from New York. So New York, it's like, that's one thing. Then we have these battery storage and capacity with the AI catalyst. So it was a twofold crossover. And I was like, ooh, this looks like it's going to be the thing I need to be in. So I started looking for structure. And my first trade was at 937. 937, right in here somewhere was my first trade. And I traded up to this 185 pretty much, or actually, let me see, 170 up to 183. Somewhere up in here is where my first trade was. And then my second trade was at 1048. So 1048 up in here. So this is my second trade. So 1048 rode that, and it did a little swing down, but it continued to hold these ideas down here. So I didn't stop out, and it ended up bringing me up here to 198 or something, and I sold. And then after I sold, guess what happened? Boom! It blew up right up here to 284 when I sold and came back down. It halted on the way down, and I was buying all of this right here, buying this dip, and this was going to be my last trade, and took the ride all the way back up here to 268 again, and ended up selling right up here, and then it started to struggle. It threw a couple more up, but I had got my 3. So I got these little ones down here, little ones, and I'm not mad because I saw this level coming up, this 196, and I sold the level, right? And it did sell off there, but I did not expect this rip out of there. But it came up, halted down, and I actually started buying around this level of 240. I bought like 25 shares, and then it fell more, and I bought 50 shares, and then I kept buying on up as it came back up. So yeah, I was definitely on this one hot, for sure. But yeah, it just kept holding my ideas, so I just didn't sell it out, and I was using these ideas as stops. But yep, that's it for that. Jump back over here to more recent news. So NYC comptroller push to drop BlackRock creates test for Mondani. Okay, so any BlackRock, that's 20 minutes ago. I don't know what that's actually talking about. NYC comptroller push to drop BlackRock creates test for Mondani. Anything else here? Let's see about these earnings.
Time now for To Watch Wednesday, November 26th. Going to start off on the earnings front. Got more reports coming out on Wednesday from Deere & Company and Chinese automaker Li Auto. Deere & Company announced results for the fourth quarter in the morning. Analysts expecting Deere to give cautious 2026 guidance with profits around $5 and $5.5 billion due to weak farm incomes, uncertain trade policy, and tariffs still posing a problem. Taking a look over at the Federal Reserve, the Fed is releasing its Beige Book on Wednesday. Remember, that's the central bank's region-by-region look at how the economy is actually performing on the ground. Investors will be watching for signs of cooling in consumer spending, easing in the labor market, and how businesses are handling costs and pricing, all ahead of that important FOMC meeting in December. And moving over to the labor market, we'll be getting weekly initial jobless claims data on Wednesday. Economists forecasting jobless claims to tick up compared to the week prior to 225,000, signaling an increase in people filing for unemployment benefits for the first time.
Think about December trading, which tends to be quiet towards the end of the year, just in time for the Santa Claus rally, with a few exceptions. And on today's Stocks in Translation, we break down how stocks tend to trade in the last month of the year to help get your portfolio ready for 2026. First, let's take a look at how the S&P 500 index tends to perform in each month of the year. So there you go, 12 months, 12 bars there. The only down month here, and this is going back to 1990, tends to be September. And I'm using the median, which is kind of like the average, going all the way back to 1990. Now here's December, and you can see it's a little bit less than November, which happens to be the best month of the year. That's what we're wrapping right now. And it's kind of in the middle of the pack, but nevertheless, it is positive, or it tends to be positive about 80% of the time. So those are pretty good odds that we have with us. Now I want to show you a couple different models that I've been updating this entire year. Now, what is in white here is what has actually happened. And the first thing you notice is there's that big post-Liberation Day dip and the blistering rally that we saw off of that. Now, I have two different maps in here. The median since 1990, that's the green line. That's basically tracking what I just showed you in that other chart, except this is updated on a day-to-day basis. What you need to focus on here is the month of December. Here's where we are. As we enter December, this just gently drifts up into the end of the year. But I actually have a different model that I have found to be very accurate, not only this year, but the last one. And this is based on the median since 1928. So that's going back a really long time, but it actually doesn't include most years. It only includes the years where we match up perfectly with the day of the week. And so what this is saying is we tend to get a nice rally into the end of November, which is kind of what we're having right now. And then we take a little bit of a dip into the middle of the month, and then we reaccelerate into new highs into year end. I would separately add that by the work of Almanac Trader, that's Jeff Hirsch, he's a friend of Stocks in Translation. He has also said that when markets are up big, the way they are now, coming into December, we tend to see consolidation for the first half of the month. So we might expect a little bit of sideways, but again, anything can happen because what we call seasonality, those tendencies based on history, well, that only accounts for about 1/3 of price action. Reality, you know, what the catalysts are and what we face on a day-to-day basis, that's at least 2/3. Now, I want to cover another market that's related to all this. This is the VIX Volatility Index. And a quick refresher here, the VIX goes up when stocks go down, for the most part. That's just kind of a loose interpretation there. But the green line is what has happened this year. And again, I'll point out this big post-Liberation Day spike. We haven't seen anything like that in quite some time. And then we had a couple of volatility spikes in October, and then I believe just a few weeks ago. And those were pretty muted. Nevertheless, the white line is the average from 1990, and you can see that after peaking in October, it just kind of gently stair steps down into the end of the year. And that's as traders go on holiday. We don't typically see a lot of volatility. So it would be really unusual, though not unprecedented, to do so. Here are a few final thoughts on December trading. First of all, we have markets, well, they tend to go up or at least sideways as volatility drops. Stocks rarely crash, but 2018, that was a big exception. When we do see big sell-offs at the end of the year, they tend to come at market bottoms and also tops. So that observation actually comes courtesy of Almanac Trader, who also notes that when stocks are up big into the end of the year, as I just noted, we tend to see that consolidation for the first half of the month and then a rally into the second half into the end of the year. Also, although we didn't talk about it today, small caps, they tend to do better than large caps, the S&P 500. And finally, you've probably heard of the Santa Claus rally. It is actually the last 5 trading days of December, plus the first 2 of the new year. So that's your start for 2026. And for more portfolio tuning tips and tricks, tune in to the Stocks in Translation podcast. New episodes can be found Tuesdays and Thursdays on Yahoo Finance's website.
All right, so one of the things that I haven't looked at in a while is SOXS and SOXL, right? So XOXL, these are, XOXL is, it follows the market, has a very high beta. When the market's going up, this thing goes up. SOXS is a inverse to the market, has a very strong inverse to the market. If the market is going down, SOXS is going up. So XOXL right now is $36.55. And XOXS is $3.91. So on this previous fall down, let me go to a daily chart here. On this previous fall down of the market, we can see, when was that? February, March. This one went all the way up to $60, right? And I think it actually did a reverse split or something, maybe, because I don't know if it actually made it up to 60. I know it went up to like 40 something, but maybe it did go up to 50 or 60. But it is now down again to $3.95. So when the market goes down, this thing gets excited. And this is that rip that they were just talking about on that the liberation rip or whatnot, right? And so right now it's at $3.95. Now both of these actually do pay dividends as well. And you can see it gets excited when the market goes down on SOXS. Let's look at SOXL. This one has been trending up. It went down during that period and has been trending back up, looking good. Now the thing is, SOXL was down here when it did go down. It was down here at $7.40. So this is something to keep in mind when we see the market drop or the market pop. So you can come out here and check these inverses, and they actually hold different stocks within them. I forgot what exactly their exposures are, but these are semiconductor kind of ETFs or instruments that hold other things that are close to semiconductors or anything like that, Nvidia and all of that, and they end up making these moves. So yeah, definitely keep those in mind. I'm gonna be looking at those because in January, the healthcare system and all of that is supposed to go back under scrutiny, and they're supposed to be making a vote. So if that goes well, great, the market continues up. But if it doesn't and the market drops again, will SOXS be something that will be viable to get another pop up from that $3 level is what I'm thinking, right? Because right now, I mean, $3 is a good, you can get like 10 shares at $3 and just see what it does. Or you can get 100 shares at $3 and see what it does coming into the end of January. The only thing is, if the market continues and it has a little bit of upward motion during the end of the year, this is going to drop a little bit more. So maybe wait for the end of the year before January and then look to see where this thing is sitting. Just get you a little starter position. I'm just thinking, starter position, maybe like 10 shares or something. If it goes, great. If it pops back up to $10, cool for a little bit. Just sell, be out. I'm not looking to risk a whole bunch because majority of what I'm looking to do is day trade these small caps. But I'll take green where I can get it and let it roll. Let's see. So back over here, low flow still looking the same, man. Still looking the exact same. No real changes over here. I know this one is blocked for trading on TOS. I think Senate said that Robinhood could trade Chinese stocks though. So if you're looking to trade Chinese stocks and you're using TOS, Robinhood could be, I think Robinhood and Webull. I'm not sure about Webull, but I know he said Robinhood. PW. And Nvidia doing its thing out here, but facing that hard challenge from ABGO and other competitors. People are kind of drifting from Nvidia because everybody's looking good right now in AI. They're just looking too good. Okay. Did we already see this December portfolio planning? I don't think we've seen this one. Maybe we did.
Means potentially a new computer or a new printer under that tree. To that end, let's bring in HP CEO Enrique Lores, fresh off his earnings release. Enrique, happy holidays to you and yours. Good to see you as always. Your biggest takeaway for this quarter?
First of all, thank you for having me here. And as you said, holidays are coming. Why not both, a PC and a printer under the tree? But let me go to Q4. We had a strong Q4. The company grew for the 6th consecutive quarter. We also closed the year with positive growth, and we end the year with good momentum, especially in the PC side, both in commercial and also in the consumer side. So it was a good quarter, Brian.
There is, I don't know, I'm going to call it a crisis because that is what other people are calling it in the industry. This memory chip crisis. There's so much demand for all things AI. It's causing shortages in chips. Prices are going up. I was reading some research from Counterpoint Research. Memory chip prices up 30% expected in the fourth quarter, another potential 20% increase next year. What is happening out there, and how are you responding?
Well, first of all, you summarized it well. There is a lot of demand for memory driven by the data center expansion, and this has created both shortages and also memory price increases. From a supply perspective, given our scale, the relationships we have, the contracts that we have, we are in a good position, but we expect memory prices to increase, and they will mostly have an impact in the second half of the year. In the first half, we are well protected given the inventories on hand that we have, but we expect to see an impact on cost on the second half that we will mitigate both by redesigning our portfolio, lowering memory configuration, looking for additional suppliers, and eventually also increasing prices given the magnitude of the cost that we are expecting.
Yeah, Enrique, these are some serious increases. How much could a PC go up because of higher memory prices?
Well, we have shared in the call that memories represent between 15 and 18% of the cost of the PC. So you can calculate that the price increases could be significant in the second half if we need to mitigate all through price. But again, we are taking other actions to try to protect demand and try to protect our consumers.
I'm not going to pretend, Enrique, that I work at a Best Buy and I'm a computer geek and I know enough about computers. I know when I press the power, Enrique, it goes on and allows me to do my work. But how do you just mentioned it, how do you redesign a computer or a printer to keep it a profitable thing when memory prices are going up? What do you have to do?
Well, we have a very broad portfolio, and what we need to do is make sure that customers buy the right portfolio for their configuration. And this is something that in the commercial side for our B2B customers, we enable with our workforce experience platform. We have tons of data that we have captured with telemetry, and this is a tool that enables CIOs to monitor what is the performance for the individual customers. So they can really optimize what memory they have, given the work that their employees will be doing, and is the perfect tool for this type of environments where CIOs will have to optimize how much memory they deploy, what configurations they deploy, and we really think this can be a very useful tool for them.
From your vantage point, even looking at it from a memory perspective, the AI build out in the United States and even more broadly around the world, does it feel too overheated to you?
I think that in the medium and long term, it is very clear that AI is going to have a very significant impact in how all of us work. And if I think about the different activities that we do in the company, we really think that this is going to be transformational. So from that perspective, medium, long term, I think that we are going to see a huge impact from AI in every activity around us.
You and I have talked a lot in the past, really the past year, about the AI PC. That time is now. What are some of the clear benefits you see from these AI PCs compared to a prior generation?
Yeah, so first of all, let me share that in Q4, the mix of AI PCs was above 30%, and our original plan when we started on this more than a year ago was 25%. So adoption is going faster than we were expecting. And there are multiple benefits from purely, I would say, hardware-oriented benefits because they have longer battery life. They are more secure because we can build security techniques that we cannot build in other PCs. We are starting to see many ISVs, many software companies taking advantage of the capabilities that these PCs have. And this can be used to process data faster and to really, if companies use the capabilities on the PCs, many of the inferencing will be faster because will be done locally. We also see other companies taking advantage of the capabilities to improve security. For example, CrowdStrike has been taking advantage of that and building specific security features for for AI PCs. So we see a lot of momentum with different software companies taking advantage of that. And we think this is just the beginning of a big transformation that will happen, because by processing locally, it is more secure, it is cheaper, and it's faster. So these are the three core advantages of AI PCs.
For as long as you and I have been talking, Enrique, you've always focused on innovation, of course, but also margins. And you've been willing to take or make tough decisions or bold decisions to protect the margins on your business. You're coming out today talking about a company-wide AI initiative with potential savings of $1 billion by fiscal year 2028, going to take a $650 million restructuring plan. What is an AI initiative company-wide inside of HP look like?
Well, as I was mentioning before, I think AI is going to transform how all of us work. And we started to do work on this a couple of years ago inside the company. And we have seen that by redesigning processes first and then adopting AI and AI tools, we can both accelerate product development, improve customer satisfaction, and boost productivity. And this is what we are announcing today. We're moving from pilots to specific initiatives across multiple areas. And today we have line of sight for around $1 billion of savings from a productivity perspective. But we think that the advantages in accelerating product development and improving customer satisfaction are going to be also very relevant.
This is a very big number, Enrique. Is it the reality that AI has made certain jobs at HP obsolete, that we just don't need to have certain positions like that anymore?
I think it's true not only at HP, but it's, I think, an industry-wide comment. There are many things that today we have to do using people and with some of our colleagues, that in the future, AI will do better and will do faster. And I think our responsibility is adapt the company to these changes, embrace these changes to make sure that we stay competitive in the future. It is not different from many of the transformation we have seen in the last 80 years that the company has gone through. And I think it's important to be in the leading front, embrace these new technologies, transform how we work, so we can stay competitive in the future.
When you say AI, is it more than just chatbots that you're using here? What does it exactly entail?
I think it's a long set of things, starting from agents that can help us to automate, accelerate many of the key processes that we have. It's about using AI in code development.
They had earnings.
It's about using agents to internally accelerate some of our operational processes. So there are multiple tools.
So right here it says HP Inc. reported fiscal fourth quarter earnings results after the close on Tuesday, squeezing out a beat in adjusted earnings, 93 cents per share versus the estimates of 92 cents per share, and revenue of 14.64 billion versus the 14.53. One of the things with HPs are not the most desired computers, but HPs facilitate a lot of computers for people that can't afford the most desired computers. You know what I mean? It's like they step in. They're kind of like, what's a good example? They are like Wendy's or McDonald's in comparison to eating really good, healthy food. They feel the need is what I'm saying with HP. So they do have some more desirable units that are higher priced, but a lot of people aim for them. A lot of companies aim for them for cheaper PCs. And so they kind of feel the need. Let me go and look at it, seeing if they pay a dividend out here on HPQ. I might pick some up. In my old dividend HPQ portfolio. All right, so it says $1.16 per year. That's not bad. Let me see what how long they've been. Oh, they got some history doing it too. From, let's see, when their first one was paid out. Payout amount. So they started from a penny in 1989, a penny. And they've just been, so let me see. It was the per year payout in 1989 was 2 cents a year. 2 cents moved up to 5 cents by 1990, 6 cents 91. It looks like they've continued to just grow every year of their dividends here. Yeah. I might pick some of this up. It's only 24 bucks, so, you know, just add it to the old portfolio and see how it does, see how it performs, see if I want to add more. 20, so 65 cents in 2019, 72 cents, 83 cents. It might be a dividend king. If has it been doing this for 25 years? If it's been lifting 1989. So that's 1990. So 2010 will be 20 years. It'll need to be doing it for 25 years for it to okay, so they had some stagnation here. Okay, I see. Right here at 32 cents per, they haven't been, so dividend kings and dividend aristocrats, they increase every single year. So 1998, then 1999, 32, 32, 32. It stayed the same too long for it to be a dividend king. It's got to get 25 years of consistent raising, like AT&T or something like that. But that's okay. It still did pop up in 2011, 44, 51, 62. So still not bad on these qualified dividends. These are quarterly dividends. So yeah, I might slap this one into the portfolio for real. Just to get some exposure to it. And you know, I buy little bits and pieces of the actual thing, and then I try to look for ETFs or something else that contains it so I can get a little bit more with less exposure. So I kind of diversify my portfolios that way. But yeah, I might grab a little bit of that. Yeah, they're like Walmart. They're like Walmart to, like, I guess Costco or something that's more higher price that could give you a little bit more quality. But yeah, HP, I'm definitely gonna throw them on the old list over here to be watching. Personal. Where is my dividend search watch list? Okay, yeah, there it is. So HPQ. And they're only $23? Man, say less. Say less. Let's see. All right. We did get some additions over here to the higher floats on the morning. So higher floats, what has joined NVIDIA? Google has joined it. It is up 1%. And Tesla has also joined, but NVIDIA still leads with the volume. As far as the low floats have really not have had a standout this morning. 38% is the highest low float that we've seen. PW, Kala, CTY at 4 million. So it's a lot of competition with these cheaper ones today. PW, and they don't have any catalyst. That's the other thing that they kind of marked it down. So MNDR, no catalyst out here. PW, no catalyst. Last time it was talked about here, it's a REIT too. So that's double negatives. A REIT, no, I'm good. Kala, no catalyst. You know, they had catalyst from yesterday. Said that they the board terminated without cause the employment of a CFO. So that's not great news. They terminated somebody. That's their news. CTY had news yesterday, which we traded. And it gave us some nice profits. And I'll go back over my trades before we end out. But IVP has been up here as well, but no interest there. All right, so back over to Yahoo. So he gave us some pretty good insight about what HP is kind of trying to do. And I think that I'm going to be picking up some of that and getting some of that, especially with them continuing to raise their value and raise their dividends and take care of not only their consumers, but their stakeholders, right? So I kind of like that in my portfolio. Let's go ahead and refresh. See if anything new has popped out here. wide. Nope, nothing else has popped out. Any new videos? This one 13 hours ago. We already seen that one. Okay. So we're just waiting for more news at this point. Trump team negotiates Taiwan chip worker training deal. That was 8 minutes ago. Poole replaced Fed Chair Powell. A closer look at Trump's finalists. Hassett emerges as the front runner in race for Fed Chair. Okay, let's see what this is talking about. This is live, so let me go look at this. Trump tariff live updates. Trump says Xi agreed to expand farm buys. U.S. negotiates Taiwan chip worker training deal.
Of having 4 policy pillars. I like to think of the Trump administration of having 4 policy pillars in no particular order. Trade and tariffs, which continues. Deregulation, which is sort of going on in the background right now with great pomp and circumstance to begin with Doge, but really kind of now playing around in the background. Tax policy, which is one of the elements that's actually got some certainty to it now because of the One Big Beautiful Bill passage, and I think that's going to create some tailwinds into 2026. And then ultimately the immigration policy, or if I tend to prefer to call it reverse immigration. So we're seeing all of this play out, and I think that's going to continue.
Do you think that it is all of this is at this point an underappreciated risk by the market? The market seems to have gotten somewhat used to some of this. And again, more broadly, do you think that the political gulf in this country is an underappreciated risk by the market?
Well, I think we have to sort of separate markets from politics and policy, and obviously, and even the real economy. They have combined effect, but they're operating in almost a siloed fashion. The disparity or the discourse with regard to policy and politics, that's going to continue, and that's going to create headline volatility. But I think the market's looking through that, whether you're talking about fixed income markets or you're looking at equity markets in particular, you're looking at Fed policy. Markets are considering a whole lot more factors, and they're looking at the fundamentals separate from the narrative that we see at the headline level.
We got to think about December trading, which.
All right, we already saw that. All right, so let's go ahead and jump back over here. So yeah, tariffs, Taiwan deal, we'll see how that goes. We got the Fed chair still trying to be decided. 4 minutes ago, it says world central banks are wary of AI and struggling to quit the dollar. Survey shows. Okay. So yeah. Anyway, let's go back over the trades. I know I went over them earlier, but this was the trades. I literally have not traded much this month. So I've taken a total of 8 trades. 3 of them came from yesterday. So before this, I had 5 trades on the month. And this is what my month was looking like. So, you know, first trading day, took a punch in the mouth in between the teeth. And and I was like, ooh, that's not great. Then came back, made just a little bit back, but definitely wasn't enough to cover this on this week. But I was like, you know what? More opportunities will come. Didn't trade Friday, went on through Monday morning of the next week, got a nice little win out of there, 289, and then behind that got a little bit more. Been avoiding all Wednesdays, just avoiding Wednesday at all costs. Then came in on Thursday, took a little loss, but that was a controlled loss. That is, so $72 is around where I have my risk at. So that was just a little bit of slippage on there over that 72, but I had my stop in there. Went back, kept going, no trade on Friday. Actually, no trades on Friday this whole month, actually, because it's been so slow. But ended up closing that week up green. Didn't trade any last week. Left last week blank because it was all trash in the small caps. Monday morning on this week was trash. And then we got a nice helping on CETY yesterday with $302. So definitely lifted me back out of the Merck and Meyer on this month. And like I was saying, you know, at this point, even if I don't find any more trades this month, I'm good. I just walk away because I know that somebody somewhere was trading all of this time and they got hurt, or they end up and lucked out and got really, really blessed. but I'm looking for those trades that, one, meet my scope. And even yesterday, CETY met everything except the price. I was looking for something that was over $5 that was low float, but when I looked at the catalyst on CETY, it sold itself too well. The catalyst, it had $10 million on a new project in New York State. And it had a couple of keywords in there that I was looking at. Okay, one, it had New York as a keyword. Not so much New York State, but New York was in there. And we know in the news, we've seen Mandami going to meet with President Trump, and both of them are from New York, right? So that was the first thing I'm thinking. Okay, New York could be a little bit of a stimulus here. And then also they had a contract, $10 million in battery storage capacity, which goes towards AI infrastructure, building out more capacity to power systems that could be used for AI development. So I was like, okay, well, that's a double. That's two things there that's kind of making me want to get into this. And so, yeah, that's why I ended up trading this one yesterday. CETY, the first trade, I took a bigger size because I kind of figured it was going to be a smaller win. The ATR on this one was 28 cents yesterday. And I was looking to get around half of that. So 28 cents, I was like, okay, well, if I get 10 cents out of this, great. So the first trade, 1,000 shares, 1,000 whatever shares, got 113 bucks. Then it opened up. It opened up big. And I was able to take smaller share sizes and make more money. So on this one, CETY got 11 cents off of this one on 530 shares. That gave me another 58 bucks. Then the last trade, 244 shares, I got 53 cents per share. That was 130 bucks. So in total, that was 302. So nice little wins on CETY. And I'm okay with not finding anything else this month. But if I do, I'm just going to use it to kind of put a little bit more icing on the cake. But I'm not sure that that's actually even going to happen, especially with what's coming up on these last couple of days. We got 4 days left in the month. Thursday is Thanksgiving. Friday is the market's going to be open for like half the day. And I really don't want to be going into the red gambling on a Friday, end of the month. I don't know if Friday's going to be. And this is one of the things me and Senate talked about in, the Discord. I was thinking, okay, Monday is slow. Tuesday is going to be when people are trying to get that money before they go on holiday for, Wednesday, Thursday, Friday. And so I was like, I don't know if Friday is going to be good. I know Thursday is going to be out. And Wednesday, I've been avoiding Wednesdays this whole month. And I'm probably going to continue to avoid because statistically, this is when I get my pockets tore out. So I kind of just been avoiding those trading days and just saying, hey, if it doesn't happen on Monday, Tuesday, Thursday, Friday, then oh well. I'm just going to, just let it live. But yeah, that's been pretty much the move and the flow of my trading this month. Very few trades, but still walking away green is good. But yeah, let me refresh this. Nothing else. Looking for any new news. Latest, original crypto. What's in the crypto news? I'll check crypto and tariffs. Speaking of Bitcoin, let me pull that up. Let's see where Bitcoin is sitting this morning. Lloyd's acquisitional curve is really about reinventing the bank account. Okay. Bitcoin. Went to 80,000, has just been holding above 80,000. Don't know which way it wants to actually go, but yeah, it's just doing its thing. I think it's still going to move up. Even if it does swing lower, I just continue buying. So it is what it is on that. I am a buyer of the dip. I am a believer of buying the dip. I really am. Especially in the long-term accounts. We got some additions up here into the high float scanner. So Nvidia's already been there, Google's been there, but Oracle popping up here as well, up 4%. So let's see what this news is on Oracle. Had news from yesterday, and then this morning it says Bernie Sanders highlights how a handful of billionaires like Mark Zuckerberg, Elon Musk, Jeff Bezos are controlling what Americans see. SoftBank CEO, I don't see anything specifically about Oracle here. Don't see anything specific about Oracle. Okay, so from yesterday, AI trade. I don't know, but Oracle is definitely moving up. Look at this thing. 196, it's up 4%. So it may actually become something. And if we look at the ATR here, ATR of $12.59 per day. So it's moved from 96 up to 206. Definitely some bullish activity over there on Oracle. So it may become the thing that people are really, really watching. So definitely keep that in mind, especially if you're trading small caps. Be in the know of what the large caps are doing, what big moves are they making, and the reason, because it could trickle down to the small caps. So if Oracle had a standout, catalyst, can we find a small cap that is moving along that same catalyst, right? Is what we'll be looking for. Okay. But yeah, that one's looking real bullish. Nvidia's slightly looking bullish as well. Google, let's see what Google's looking like. Actually, the overall market is looking bullish too. Google, come on now. Okay, there you go. Google isn't looking so hot. Tesla has moved up as well. Let's look at the NQ, the overall market here. So we've had a little bit of flat trading in here. So we had this original idea that it continues to hold. Let me go back a little bit, or actually, so it's still holding this original idea here of the 20, whatever it is. It slashed down through here, came back up, tested it a little bit, fell down, and continues to just hold this level, rising on up. And then today we have a little bit of consolidation above the ATR highs. I don't know if it's going to be doing any breakouts or whatnot. If it does, great. It's going to help Oracle out. If it does stay flat, that's cool too, because it's Wednesday. So we're kind of just waiting the water before Thanksgiving tomorrow. All right. But yeah, pretty much have analyzed the market, seeing where the value is and all of that stuff. And I don't want to spend all day doing this, especially if we know that the majority of the focus is looking like it's going to be on the higher floats. And I'm thinking Oracle is going to be the thing today. Being up 4%, it just needs more volume is all. It has the range, $12.59 per day. Let's see, 96 up to 206. So it's moved $10 today. So it's got this big range that it can actually play in between here. 96 up to 206. All of this range in between here can play. So if this is a range playing day, I'm gonna let the professionals have the ranges on the high floats. Nvidia popping back up to green now. So all of these on the high flow scanner looking green. Even though they're small green, that is some bullishness coming in there with it being here. That is very interesting. And then the other thing is with the high flow. So Nvidia is the top volume mover with 5 million shares here. If we look over here at some of these low floats, MNDR, these are almost sitting still, not getting any trades and not getting any motion. MNDR sitting here with 10 million. It's going to get capsized once the open comes, because making it to 10 million, if Nvidia starts the morning in pre-market with 5 million, it's going to blow through 10 million at the open. And look at Nvidia just continues to press its way up. That's what I'm saying. There's too much bullishness on the large caps right now. Too much volume too, with it being pre-market. Small caps and low flows are probably not going to be the best active wear today. MNDR over here going on down. That was that Malaysian stock getting the 2 AI optimized data centers. It's the thing that has the 10 million. Then PW only $1.04. No catalyst since whatever 70 is. I guess that's January, February, March, April, May, June, July. No catalyst since then. It just pops up today. That's weird. Kala 21% with 11 million shares with no catalyst. So we just have to be mindful not to get tempted into the wrong thing. We need to see these things have to sell themselves to us and say, hey, here's my offer. And we have to be, the trading is hard is because you have to play every role in the business process or the sales process. You have to be the salesman, you have to be the buyer, you have to be the researcher, you have to be the CEO, you have to be the accountant, you have to be the janitor, you have to be everybody in the business sitting here at a computer looking at, you know, these transactions or these instruments that you use. You have to play every role in the business. You are the CEO, the CFO, the HR manager, you everybody, right? And that's what makes trading hard, is because you are literally wearing all these hats at one time. Anyway, I'm about to get on down here and get on to my day. I'll continue watching, but I think today's going to be a large cap day. Oracle still doing its thing. I think Oracle is actually going to be one of the things. And I did the other thing that we were looking at was HP. Probably going to add that to a longer term portfolio. But other than that, Oracle. Let me look over here one more time at the news before I get on down. Let's see. Mackenzie Scott's college roommate once loaned her $1,000. Now it's a billionaire's turn to invest. I don't know. Let's see. Not seeing anything else new. So yeah, I think we've pretty much seen what it is to see out here. And I'm going to let it ride out today. Let's go back through the scans real quick. So for the low floats, looking pretty dead. Higher floats, Nvidia, and these top 4 are going to be in competition to draw attention today. Nvidia, Google, Tesla, Oracle. These are going to be the competitors for sure. But yeah. So yeah, that is it for me today. I'm going to see you guys not tomorrow, because tomorrow is Thursday, Thanksgiving. Y'all have a great Thanksgiving tomorrow. Be safe today if you're going to be trading. If you don't celebrate Thanksgiving, well, and you're not inside the U.S., it is a time where we remember what we're thankful for. We remember the people that we're thankful for, whether they are here or not. We remember the memories that we're thankful for. and we celebrate that with food or a get together, a gathering of some type, and it's pretty cool. Pretty cool holiday, taking us to the close of the year, right? Being thankful for what we have this year, going into the next year. But anyway, that is it for me today. Appreciate you guys for tuning in for sure. And as always, I will see you guys in the next one. Peace.